Hey everyone, welcome back to Dividends and Dollars. If you've been hearing people talk about silver like it's about to explode, and you're wondering should I care? You're in the right place. Because right now, silver is one of the most talked about assets on both the industrial and investment side of the market. And Canadian investors are asking the same question. How do I invest in silver without it burning me? Prices have been crazy lately. Silver actually blasted past $100 per ounce earlier this year, which is something you haven't seen in a long time. Analyst Buzz even includes a price target as high as $100 again from some corners of the industry, driven by tight supply and strong demand. So today, we're looking at the three main ways Canadians invest in silver, and I'll break down the practical pros, the real risks, and the kind of investor each one actually fits. No boring spiel, just the real deal. Let's start with the most old school version, physical silver. When people say they own silver, this is what they mean. Actual metal. Coins. Bars. Rounds. You hold it, you store it, you insure it. It's physically there. And that's the big appeal. There's no broker, no trust, no intermediary. You own the metal itself. No counterparty risk. For Canadian investors, there's another practical benefit. Investment-grade silver 99.9% is generally exempt from GST or HST. That's a real, tax-saved dollar right in your pocket. But before you go all in, let's talk about the downsides in real terms. Physical silver costs money to store and secure. It's not like a stock where you hit sell now. You've got to take it to a dealer or find a buyer. And dealers don't give you the full spot price when you sell. That bid-ask spread can eat into returns if you trade often. So physical silver can make sense if you're thinking long-term, you want something tangible, and you don't mind having it outside your brokerage or registered accounts. Now, let's talk about the way most Canadians invest in silver today, ETFs or trusts. Instead of owning metal yourself, you buy shares in a fund that holds silver for you. You can buy these right in your TFSA or RRSP, and that's a big deal, because gains inside ETFs are tax-free and RRSP gains are tax-deferred. That alone makes silver ETFs super attractive compared to storing bars under your bed. These ETFs usually hold real silver in vaults, and you trade them like stocks during market hours. That's huge liquidity compared to physical bars. So downside, you're not holding metal in your hand. There are management fees, and you rely on the trust or ETF custodian to actually have the silver. Some funds hold physical metal, others use derivatives, and that difference matters for how accurate the price exposure actually is. But here's the news twist. ETFs have been a major part of recent silver demand. In 2025, global silver ETF holdings saw big inflows, tens of millions of ounces going into these funds, which added fuel to the price rally. And that rally hasn't been quiet. Silver has had one of the strongest runs among commodities recently, even outpacing gold at times on ETF volume and price gains. So if you want easy, tax-efficient exposure and the ability to buy and sell instantly, silver ETFs are usually the simplest choice for Canadian investors. Now, let's talk about the one that gets a lot of hype, paper silver, meaning things like futures, options, and CFDs. These don't represent actual metal. They are statements on what price might be in the future. That sounds useful, but it comes with serious risks. The biggest attraction here is leverage. You can control a big position with a small amount of money. Sounds great until the market swings against you, and then your losses get magnified just as fast. Paper silver is more like trading than investing, and if you're not very experienced, it's easy to get hurt. Tax treatment for these instruments in Canada can also be more complex. and they behave very differently from just holding a metal or an ETF. So unless you genuinely understand futures and option risk, this isn't where most Canadians should start. All right, let's tie this back to what's actually happening in 2026. As I mentioned earlier, silver had an incredible rally, even breaking triple digits per ounce. But that doesn't mean the path upward has been smooth. Just recently, prices fell sharply after news broke about a potential new Federal Reserve chair with a more hawkish monetary outlook, leading to a stronger dollar and profit-taking in metals. That's a reminder, precious metals are still sensitive to macroeconomic policy and big swings happen. At the same time, the long-term fundamentals behind silver haven't disappeared. Supply has been in deficit for multiple years, meaning demand has outpaced supply consistently. And industrial demand, solar panels, EVs, electronics, is a real structural driver that didn't exist decades ago to nearly the same degree, and it continues into 2026 and beyond. So what's the takeaway here? If you're thinking long-term and want something tangible you can hold, physical silver bars or coins might fit your goals. Just be mindful of storage and liquidity. If you want easy exposure inside your TFSA or RRSP, without the hassle of physical storage and with tax advantages, silver ETFs are usually the best starting point for Canadian investors. And if you're tempted to go after big moves with futures and leveraged products, just understand this is not the same as owning silver, and it's a very different risk profile. Silver isn't a magic bullet, but as part of a diversified strategy, it can fill a unique niche, especially given the current supply-demand dynamics and market action we're seeing in 2026. Let me know in the comments, are you holding silver bars, ETFs, or just watching the market from the sidelines? Hit like if this made sense. Subscribe for more Canada-focused investing breakdowns, and I'll see you in the next one.